Supermicro Computer, Inc. NASDAQ, SMCI, demonstrated notable strength on Wednesday, advancing 2.6% to close at $32.24, following intraday highs of $32.68. Trading activity was elevated, with approximately 37.6 million shares exchanged, an increase of 6% over the stock's 35.5 million average daily volume. This follows a previous close of 31.41. Market participants have attributed the buying pressure to a combination of robust AI-related demand, a backlog exceeding $11 billion, the establishment of a $2 billion credit facility, and concentrated short interest that has created conditions for a potential short squeeze. The market for AI infrastructure hardware has been invigorated by aggressive capital expenditures from Taiwan Semiconductor and comments validating strong, sustained demand for AI chips. This macro-level support has helped re-rate names across the AI hardware sector, including Supermicro. Analysts have highlighted that SMCI's $11 billion-plus backlog, the new credit facility, and heavy short interest collectively set up a potential squeeze, which likely contributed to the intraday buying activity. Despite this positive momentum, the company's fundamentals remain mixed. Fiscal first quarter 2026 earnings were reported at 0.35 per share, missing the consensus estimate of 0.46 by 0.11. Revenue for the quarter totaled $5.02 billion, significantly below the expected $6.48 billion and representing a 15.5% decline compared with the same quarter in the prior year, when revenue stood at $5.94 billion. Gross margins are compressed, and competition in the AI server space is intensifying. These factors, coupled with analyst downgrades, have resulted in a consensus hold rating with an average target price of $46.19. Though valuation arguments suggest the stock remains inexpensive at approximately 0.5 times forward sales. Investor sentiment on SMCI is varied, reflecting differing perspectives on valuation, near-term catalysts, and operational execution. Positive sentiment. Several analysts and commentators argue that SMCI is deeply discounted relative to its growth potential. Seeking Alpha highlights the company's modular data center building block solutions, DCBBS, and diversification into multiple customer segments and product lines as avenues that could restore margins over time. These factors support a contrarian investment thesis, whereby the stock may rebound if operational execution aligns with market expectations. Neutral sentiment. Short-term trading indicators, particularly in the options market, suggest elevated positioning that can amplify price movements in either direction. Benzinga reports significant activity in SMCI options, signaling potential volatility, though these dynamics do not alter underlying fundamentals. Market observers are also focused on upcoming fiscal second quarter 2026 results, with guidance on revenue and margins serving as a key near-term test. Meeting or exceeding guidance would reinforce the bullish backlog narrative, while missing expectations could reintroduce downside pressure. Negative sentiment. On the competitive front, SMCI faces challenges from larger players, including Meta Platforms, which benefits from deep pockets, proprietary AI chips, and large-scale infrastructure. Analysts note that Meta's scale and cash position provide a competitive edge, highlighting the pressures on SMCI to maintain margins and meet demand efficiently. Analyst sentiment has reflected these concerns. Citigroup reduced its price target to $39 with a neutral rating. Other firms, including Goldman Sachs, Mizuho, Wedbush, JP Morgan, and Sanford C. Bernstein, have adjusted targets downward or maintained conservative stances. Specific adjustments include Wedbush lowering its price objective from $48 to $42 on November 5, 2025, while JP Morgan reduced its target from $43 to $40 on the same date. Mizuho set a $31 target on January 9, 2026. 8 analysts have assigned buy ratings, 8 have assigned hold, and 2 have assigned sell, resulting in a market consensus rating of hold with a $46.19 average target. Supermicro Computer maintains a moderate leverage profile with a debt-to-equity ratio of 0.72, a quick ratio of 2.95, and a current ratio of 5.39. Its 50-day and 200-day moving averages are 32.03 and 42.79 respectively, while its market capitalization stands at $19.25 billion. The company reports a price-to-earnings ratio of 25.79, a price-to-earnings growth ratio of 0.68, and a beta of 1.54. Fiscal first quarter 2026 metrics include a return on equity of 12.70% and a net margin of 3.7%. The firm's guidance for Q2 fiscal 2026 sets EPS between 0.46 and 0.54. Analysts project full-year 2026 EPS at 1.86. Hedge fund activity in the stock has been modest but consistent, with multiple managers establishing new positions in recent quarters. Notably, Anfield Capital Management, Twin Peaks Wealth Advisors, Flagship Harbor Advisors, and Armstrong Advisory Group each initiated positions valued between $25,000 and $29,000. Hazlitt Bird & Watson increased its holdings by 68.6%, reflecting continued institutional interest. Overall, 84.06% of SMCI's shares are held by institutional investors. Supermicro designs, develops, and manufactures high-performance servers, storage, and networking solutions for enterprise, cloud, data center, high-performance computing, and edge computing applications. Its product portfolio encompasses rack-mount and blade servers, storage subsystems, motherboards, chassis, power supplies, and networking components. The company emphasizes high-density, energy-efficient configurations optimized for GPU-accelerated workloads and AI applications. Supermicro combines in-house engineering with a global manufacturing and distribution footprint, delivering configurable, application-specific systems tailored to client requirements. The company's strategy focuses on modularity, energy efficiency, and integration of the latest NVIDIA and AMD GPUs to meet growing demand for AI and high-performance computing solutions. In the AI infrastructure sector, SMCI and Meta platforms occupy complementary yet distinct positions. SMCI functions as a supplier of high-performance, energy-efficient servers, whereas Meta acts as a hyperscale owner and consumer of AI compute resources. Both are positioned to benefit from the projected growth of the AI market, which Markets estimates will expand at a 30.6% CAGR from 2025 to 2032, reaching $407 trillion by 2032. Supermicro's competitive advantages include end-to-end AI rack-scale systems integrating compute, networking, storage, and liquid cooling. Its modular data center building block solutions facilitate rapid deployment of large-scale AI training environments, enterprise inference platforms, visualization systems, content delivery infrastructure, and AI edge solutions. Upcoming facilities in the U.S., Taiwan, Malaysia, the Netherlands, and the Middle East are designed for rack-level production, not simply server assembly, enabling scale and operational efficiency. Diversification efforts extend to client, edge, and consumer AI markets through products such as Super AI Station, Supermicro SYS542T2R, Supermicro AI PC, Supermicro Edge AI Systems, and fanless compact edge systems. These initiatives position the company to leverage its expertise in AI-optimized servers, GPUs, and energy-efficient system design across a broader range of applications. Supermicro projects fiscal 2026 revenue of $36 billion, reflecting 64% year-over-year growth. Rapid expansion has introduced certain operational challenges. First quarter fiscal 2026 closing inventory rose to $5.7 billion from $4.7 billion in the prior quarter, extending the cash conversion cycle from 96 to 123 days. Negative free cash flow of $950 million underscores liquidity and efficiency considerations. Zacks consensus estimates indicate modest 2.43% fiscal 2026 earnings growth, with downward revisions noted over the past 60 days. SMCI trades at a forward 12-month price-to-sales ratio of 0.46x, compared with Meta's 6.42x, highlighting a significant valuation discount relative to larger competitors. Supermicro Computer operates at the intersection of strong AI-driven demand and significant operational execution pressures. Its substantial backlog, new facilities, and modular AI solutions provide a foundation for growth, while compressed margins, extended cash conversion cycles, and competitive dynamics present measurable risks. The company's upcoming fiscal second quarter 2026 results will be a critical test of its ability to convert backlog and expansion initiatives into sustainable financial performance. For investors, balancing the growth potential against operational and macro-level risks will be essential in assessing the near-term and long-term prospects of SM.